Hey guys, it's Steven. Hope you're having a good Tuesday. I'm actually having a pretty good Tuesday. My wife won a cart full of groceries at our Amazon Fresh, which is kind of crazy. I went to our local Amazon Fresh around 11:30 to get some turkey for lunch, and one of the employees asked if I wanted to enter a giveaway because it's their 1 year anniversary. So they were giving away a cart full of groceries, but you had to be there to win. And it was at 1 o'clock. So I came home and told my wife and son that they should go at 1 o'clock and just get a ticket. It's not that far away from the house, and see if they could win the groceries, because usually there aren't that many people in our local Amazon Fresh anyhow. And they went back, and there were not a crowd, but they said there were more people than usual there for the drawing. But they entered at the very end, and it was a drawing where it's a ticket that has two halves, with the same number on each half, and so they each got a ticket, which was placed basically right on top of the pile of tickets, and then the Amazon Fresh manager shook the box of tickets to mix it up, but literally just shook it side to side for a couple of seconds, my son said. So when she reached in to get the ticket, their tickets were right on top. So they ended up, like I said, winning a cart load full of Amazon groceries. So I've been making money trading Amazon stock, and now Amazon's giving me free groceries. So I'm a big Amazon fan today. What I want to do is go over this, in this case, the green takes red strategy. Again, this is a 2 minute chart, but this strategy works on any time frame. It doesn't matter what it is. But if you're looking at scalping, obviously you're looking at a 2 or a 5 minute time frame, you can use this. If you're looking to, if you're more investing and holding longer term, you can use this on a daily chart or even a weekly chart. If that's more what you're looking to do. But it's the strategy is so simple to employ, and can be very profitable. I mean, basically, all you're doing is taking advantage of the trend. So as long as you have a trend in place, this strategy puts you into the stock at the right time. Let's just jump right into it. Again, on the 2 minute, this was yesterday. I had said early in the day, before even 10 o'clock, that I thought Amazon was going to go to 143, which it did intraday. I didn't know that it would necessarily do it all intraday yesterday, but it went from 139 to 143. And I had said to the group a little before 11 that the green takes red was working really well on Amazon for scalping, and again for taking a longer position, even just intraday, if you wanted to. But let's jump right into the chart. As you can see, there was a slight gap from the previous close, and Amazon ran up. This was the reason it was so strong and clearing some resistance. That's the reason I thought it would go to 143. The stock moves higher. You want to employ this strategy anytime you're using the 20. So basically, all you're doing, again, super simple. If the 20, and the red line here is the 20, if the 20 is moving higher, then you're going to be doing green takes red. So when you have a red bar, and this is here, I'll jump right here to the first example. You have this red bar, which right up here it tells what the high and low of the red bar is. So the high was 140.56. The low is 140.38. So when you enter this trade, what you're looking to do is buy above the red bar. So when this next bar goes green, when the price goes above 140.56, you want to buy. So you want to buy at 140.57, 58, 59, right, as close as you can to when the green bar takes the red bar. Your stop, anytime you enter one of these positions on a green takes red, again, whether it's daily or on a 2 minute or a 5 minute or 15 minute, you want your stop to be under that red bar. So this is the red bar again that we're basing the trade on. So the low is 140.38. So your stop is 140.38. You're buying over 150, 140.56. And if it turns around immediately and drops, then you're stopped out at 140.38, which is what, 18 cents? So that's an 18-cent stop, which is extremely tight risk management on a $140 stock. You're talking 18 cents. All right. So it's one of the things I like so much about using this to scalp is that that stop is really close. So you can take a larger position because you probably know you should be managing the size of your position based on how much you can lose, right? Not how much you can make in a trade, but on what your potential loss is. So with a small potential loss, you can take a larger position in the stock. All right. So this was the first one. So let's start at 10:30. Let's let it if you want to make it as low risk as possible, let the stock after it and makes this move in the morning. You don't have to trade the open if you don't want to trade the open if it's too volatile. Wait for the stock to come back near the 20, which obviously is rising. These two would have worked, but let's go right here at 10:34. I already ran through the numbers. You want to buy at 140.57, 58. Say you got in at 140.60. The next green bar, that's as you're close to your entry, you're going to be aware of your stop because if it's moving up, this is the closest it's going to be to your stop if the trade's working well. It didn't. This bar, the low was 140.43, and that was actually before it even went above the 140.56. So this was the buy. You're going to buy here. You walk it up. Again, if something's trading well and you're able to, you're sitting there and trading this, you can keep this stop as it moves. The way I do it, as it moves higher, I'm going to be moving my stop up, right? So if you get a big green bar and a second big green bar, at minimum, I'm going to move my stop up to this 140.84 level. Right? Again, this is scalping. So if you bought at 160, you're going to lock in a gain of at least 24 cents. All right, at least. That wouldn't have gotten a hit here. 184 traded right to 140.84. So maybe a stop out, maybe not. If not, you keep getting green. This is if you're not in. Here's another entry point, a high of 141.11. So you're going to be buying at 141.12. The stock rises again, up to 141.31. So this is giving you direction. You want to be long because the 20's going up, and it's giving you an entry, right? Those are the two things should I get long this stock or short it? Like, what should I do? And how should I get in? Like, what's my entry? Those are the two questions I get most often. What do you think this stock's going to do? Is it going up or down? Should I get long or short? Where should I buy? And that's what this strategy lays out. Like, again, like super simple. I don't know, a 10-year-old could do this. This line's going up. Buy the green bar when it takes out the red bar. Okay? Green didn't take out red here. Didn't take out this red. So this is your next red, right? So nothing taking it out. This is your next red. Okay? So now you're looking for green. The high on this one, 141.14. So you're going to be buying at 141.15. If 16, 17 is fine. And your stop is 140.96. So again, a 20 cent, whatever it is, stop, like, great for $140 stock for a strategy to say you're only risking 20 cents. Okay. This doesn't take it out. It only gets to 141. So you're riding this as you bought over 141.14. So you're riding this up. You're getting 141.62. Again, another 50 cents. If you didn't get that one, or even if you did, you can add here on the pullback as green takes out red again. You get a high of 141.78. Coming back to the 20, and look how the stock just rides. Beautiful. Just rides the 20. Another entry here. Green takes red. A high of 141.51. So you're buying at 141.52. You get a move to basically 142. So another almost 50 cents there. And you're going to move at a minimum, move your stop up as the bigger, well, that's how I do it. At a minimum, I'm going to move my stop up as these big green bars form. Okay, now in the middle of the day, it's 12 o'clock. Not the best time to trade anyhow. But what's the 20 do? It starts heading down. If you're someone who doesn't like to short, fine, then just ignore the signals when it tells you to short. So ignore the red takes green, go take lunch. Nothing going on. 1 o'clock. And then it starts heading higher. You don't have to jump in the second the 20 starts headed higher. Okay. It's already headed higher here. All right. It's angled up. But just wait. If you're, be patient. You'll get cleaner, higher probability plays if you're not trading when the 20 is flat. You're just going to get chopped up. So wait for it to turn. You could have taken this one a little aggressive. Okay, here works. I'm buying 142.04, so you're going to buy it at 142.05 with a stop at 141.98. Literally a 7-cent stop. Okay, this comes back to 141.99, and then we're headed up to 142.22. You never this is not going to stop you out, and then you're moving to 142.40, and then 142.50. So another 50 cents. You risk 7 cents, and could have pretty easily in what time frame? In half an hour, gotten 50 cents out of this trade. You're doing 1,000 shares. You risk $70 and made 500 in half an hour. All right, let's move. Keep going. You get this nice dip. It dips under the 20. One of the things to be aware of is that once you dip under, back under the 20, it could be setting up for reversal. But one of the worst things you can do is get in early on what you think is a reversal. This stock is showing like a great amount of strength in this move from the morning. It's only going to go so far, right? Intraday. But just be aware that it's still, the 20 is still going higher. And if you took this green, so we didn't have any green here, and not even none of these were green and then turned. They didn't get above the prior green, the prior red, right? Nothing gets above that. Nothing gets above that. Nothing gets above each one of these until you get a turn here. So here you're going to be buying this. It's near the 20. The 20 is still going up. I don't think this is an aggressive trade, even though you're under the 20, and you want to be aware of where you are in relation to the 20, but you're just under, right? You don't want to buy if you had a sudden move down here to 141 and a half or 141 75. Then you're going to want to wait because you dove under the 20 rapidly and aggressively, and you're not going to want to get long that. But if you just got a little dip under the 20, you're going to buy at 142. What's the high? 142.40 as it goes through. And you got another 60, 70 cents as it moves away, and you see it moves away from the 20. And as it's getting far away, you want to, that's where you're looking to take profits, right? As it's moving away. As you know, a stock is always, especially on a 2-minute, it's always going to come back to the 20. So you just want to be aware of how far away you're getting when you're, in this case, when you're long the stock. Boy, it just kept going. You finally had a turn at the end, but if you took these last couple, you should have made at least a couple of dollars during the day on this. Then maybe you lost a few cents here on a stop out, but again, really tight stops. If you took this green over this red, still, and again, it's a little bit away from the 20, but not too much that I would worry about it. I think you can still take a shot at this, but then you start getting topping tails, so you gotta be aware of that. So that was yesterday. Again, Amazon, the green takes red because the 20 is sloping up. That's all you're looking for. The slope of the 20, is it up or down? If it's flat, you want to stay away. If it's down, you're looking to go short. If you don't want to short, that's not in your trading repertoire, then don't short. Just play them, long. Just play 20s that are sloping higher. Yes, that's basically it. Like I said, Amazon yesterday, green takes red. I can't emphasize enough how simple, easy this strategy is if you implement it and stick to the stop, which in most cases should be fairly small. Make sure you're close to the 20 when you're putting on the position, and that's basically it. Again, hope you have a good day, and I will talk to you soon. Thanks.